Hey everyone, welcome back to Fiscal Voyage. I'm Felix, and today's video we're going to talk about a high quality, fairly valued, fairly undervalued stock that I currently own. I'm down maybe about 2% or so, but I'm looking to buy more shares of this stock, and I'll show you why I'm looking to buy more shares. Hopefully by Friday I'll be able to pick up some more shares. So the company we're talking about is General Parts Co., ticker symbol GPC. And you can see here, based on fast graph, first off, if we take out the price, the company is very solid. Earnings been growing around 7.5% annually over this 20-year period, so which is good. It has some down years. You can see here 08 2% down, and 09 negative 14%. And here in 2016, negative 1%, in 2020, negative 7%. But after COVID, it had, like a lot of stocks, earnings increased tremendously after COVID. You can see here 31%, 22%, or 21% in 2022, and 12% in 2023. So expected to have a flat year this year, but then picking up around 8%, 7%. A lot of analysts are expecting 8% growth for the next 3 to 5 years, and I'll show you shortly. But first off, if we look at the chart here, and you can see the company, for the most part, has a normal multiple of around 18, and now at the current price, we're getting it under 15. We're getting a 14.3 or 14.27 with the earnings yield of 7%, which is good. I like this. Is 6.5 or higher, and it's close to a nice dividend yield of 3%. And speaking about the dividend yield, there's times where the stock has a really high dividend yield around 4.21. But if we go to Seeking Alpha and look at the past 5 years, this is probably the highest point in the dividend yield category. See here, if we go to dividend yield over a 5-year period, you can see here, of course, during COVID, it crashed and it had almost a 6%. But outside of COVID, you're at basically where that 3% is where a good buying opportunity. You can see on the chart here, in COVID, the stock went as low as $50. So this is why this has this high yield of 6%. But if we go back to fast graph and remove the yield and shorten this time period, what I like about this is that over this 10-year period or 8-year period, the stock tends to have a normal multiple around 20 or 19.4. And if it were to revert back to that multiple, you can see here we can have almost a 23% annual growth rate for the next 3 years. That's really good on a high quality company. It has a BBB credit rating, long-term debt to cap of 44%. But I like the history. You can see here, the dividend's been increasing year in and year out. Through COVID, through the financial crisis, didn't cut the dividend, and it's been increasing it fairly well. If we go here, the most recent increase in 2023 was 6%. 9% isn't a single digit, but it is in that 5 to 9% increase period. They had that 1 year in 2012 with 10% increase. But what I like is, look how the dividend payout ratio is very low at 42%. And if we go to operating cash flow, the dividend is covered in operating cash flow of 40%, and free cash flow as well. The dividend is covered, and you can see here free cash flow is expected to increase in 2026. So that's a lot of the reason why I like this stock. I own shares around this price. I'm down about 2-3%. I'm looking to buy more shares, and that's why. Now I'm going to talk about technically why I'm interested in buying more shares. But first off, we go to Morningstar. They gave it a 3-star rating, which is kind of like fairly valued. You see the fair price at $48, so it's slightly undervalued to their fair value price, but more or less fairly valued. Some other things I like here, if we go to the estimates section of the Morningstar, you can see here price to sell is higher, or right over here, 23 is lower than previous years. You can see here revenue has been increasing year in and year out. Modest increase, about 2.2, 2.8. Expected increases for the following years. Last year, revenue increased by 4.5%. So Morningstar gives it a 3-star rating, as well as CFRA gives it a 3-star hold rating. with the price target at $40. But I like this 3 years projected earnings growth of 8%. You can see here the revenue expected to increase this year and next year, so I like to see that. And then the earnings increase from 2023 to 2024 and 2025, so I like that a lot. And you can see here expected estimate earnings. So, and estimate earnings are pretty accurate. You can see here the 2 years is probably hit or beat, and you can see here, so these estimates are very accurate for General Parts Co. Is a predictable company, so that's why I like it a lot. It looks fairly valued, or fairly valued to slightly undervalued currently, and I'm looking to buy more shares of this company. Now if we go to the chart, and I can show you why I want to buy more shares, but there is a downside, and I'll tell you why. So first off, if we draw support and resistance, this is kind of like the support and resistance area. You can see here this area was resistant, then it broke out and then became support right here. So, but if you see this is the monthly moving average, the 50 moving average and the 55 moving average, you can see it supports that area. And then COVID, of course, came back to 200. But you can see it bounce here, and then it's possibly bounce here, and I think it will bounce here because of the valuation. Earnings, a lot of times with the stocks, as long as earnings is growing, the stocks will follow, and the stock price will follow as long as earnings is growing and you're not paying an overpriced stock. But if we look at this, it has the potential to want to hit back here in this 210, 215 area, this up to even 103, this, so 100, 110. It's possible that it wants to come here, hit this before it runs up, and if it does, I'll be buying more shares. So I'm looking to buy more shares currently because of this moving average. Right, this moving average, I expect it to bounce because it's fairly valued. But if it does fall to this 110 or up to here 115, 116, I will be buying a lot more shares, because that would be extremely undervalued at great support area. So that's what I like it. And then if we go to the 3 month, and this is why I think it's possible that it goes lower, but you can't really time the market. So as long as the stock is at a good price and you're willing to buy it at that price, I think that's a great opportunity. But this right here, the 13 moving average, you can see here is above the current price, and it tried to break out of it right over here on this on July, but now it's over it. So it's possible that it could hit it, but then fall down up to this moving average, the 50 moving average on the 3 month chart. And you can see here during the 2008, during COVID, was great buying opportunity. Even if, for example, COVID, you bought it at $70 and it went down to 50, you still came out winning, because the month later, boom, you're up to $100, and then it went up to 180. So even if you bought it here, when it hit it, you still came out winning. And same thing with here, you still came out winning at $35, even though it went lower. Those are great buying opportunity on a 3 month chart. And you can see here how it kind of supports that area. So it falls in line with the support and resistance bar here. You can see how, and especially since the 13 moving average on the 3 month is above the current price, that is a good, decent indicator. And it had a retest here and it failed. Is a good indicator that it might go lower. But I can't time the market. If it does get lower here, I'm buying a lot more, because of course we have the moving average and the support resistance. And if we go back to the fast graph, that means this stock would be around kind of like right over here, which would be extremely undervalued, and that would be a great opportunity. That should bring the yield around 4%, 5%. And as we spoke about, the dividend is very well covered, and earnings expected to grow. So it's a great buying opportunity to buy it around that 110. So even at current price, it's fairly valued to undervalued, slightly undervalued. It still be an amazing opportunity if it goes to that 115, 110 area. And as we saw, it fall in line into the support resistance as well as this moving average resistance or support. So that's why I like General Parts Co. Overall, great company. I own shares. I'm down a little bit, but I'm looking to add more shares. And let me know what you guys think of this company. Do you own shares? What do you think at the current price, around 133? Let me know in the comments, and I appreciate you guys. Make sure if you're new to the channel, hit that subscribe button, and make sure to hit that like button as well. And I'll see you guys in the next one.